We all know the saying, the rich get richer and the poor get poorer. This is especially true during high inflationary periods. I want you to think about inflation as doing one of two things, and it really depends on how you see it. I've shown you this picture before, but for some, inflation looks like this picture of a frog. Inflation is a tax stealing your purchasing power. While for others, inflation is like this picture of a horse, meaning it's one of the best wealth transfer vehicles ever created. The reality is both are true if you can train yourself and your eyes to see both realities in the same picture. Let me share a few data points that really drive this point home. The top 1% have increased their wealth by 50% since 2020, while another study found that inflation has made their financial lives worse for 65% of US households. And among that 65%, 19% of them said it's made their lives much worse. Since 2020, billionaires have become 34% richer as their wealth has grown 3 times that of the inflation rate. Overall, 17% of people reported they could not pay their previous bills in full. If you've been buying gold and silver for some time, I'm certain, like me, you are very aware and concerned about the dollar and its loss of purchasing power. The erosion of our dollar is critical as we seek to safeguard and even grow our wealth. As Warren Buffett warned us, the first rule of investing is don't lose money. And the second rule is don't forget the first rule. While this is irrefutable, there is one aspect that Buffett doesn't really speak to, which is growing your wealth. And I find that ironic because that's all he does. But that aside, what this really means for us is that the first step is make sure you don't lose money. And the second step is growing your money, especially during periods of high inflation. Let me give you an analogy. Think of inflation like a bullwhip. The furthest end of the whip travels the greatest distance, which means it carries the greatest amount of force, thereby making it the most painful. The impact of inflation is very similar. The further you are away from wealth, the more impact inflation has on you. For example, a recent report estimated that most families need an additional $10,000 or more just to afford the same goods and quality of life they had just 3 years ago. When you contrast this number with the stat that only 44% of Americans can afford a $1,000 emergency expense, meaning anything over that amount would require the use of a credit card, it's no wonder people are struggling. They can't address an $1,000 emergency. How in the world could they absorb a $10,000 increase in living expenses over 3 years? They just can't. With inflation eroding the value of our paper currency, we know that gold and silver have historically served as reliable stores of value and hedges against these kinds of economic uncertainty. This is fine if we just want to follow Buffett's first rule and maintain our current standard of living. But remember, step 2 is in the process is how do we grow our wealth? In a 2023 article written by Ed Wolf titled, "Is There Really an Inflation Tax Not for the Middle Class and the Ultra Wealthy?" he points out that inflation falls mostly on the poor and working class because at different income levels, the average person has a different balance of assets versus income. He points out that poor people don't own much, so they get the worst part of inflation where their income becomes less and less valuable, while the wealthy and the super wealthy own assets that increase in value as a result of inflation. This is critical because while inflation is at best remaining the same and potentially coming down very slowly, it's already done its damage. Not to mention, as we learned in the 1970s, inflation tends to come in waves. So it may be in our best interest to prepare for what seems to be inevitable once the Feds lower interest rates. In particular, we have to pay attention to 5 key areas when evaluating and trying to address the real impact of inflation. 1, asset ownership. 2, debt and leverage. And we're not talking about leverage or debt in terms of consumer debt. 3, income and earnings. 4, consumer prices or the cost of goods. And 5, investment strategies. I would summarize these 5 areas in this kind of way, and this is kind of my statement. Ultimately, inflation is a wealth transfer mechanism that acts like a tax on those that spend, overspend, or have a lack of savings. Because of this, the rich benefit as their assets increase in value. Their good debt is eroded away, making their leveraged debt more profitable. Their high income and high earnings allow them to weather the storm of increasing consumer goods while they use their investments to grow their wealth during these times. On every meaningful front, inflation systematically transfers wealth from the poor and working class to the owners of assets, which are overwhelmingly the very wealthy. Folks, this is exactly how we shift inflation from something that erodes our wealth and purchasing power into something that grows it. The system is set up to reward holders of assets. What that tells me is that our focus for the next 3 to 5 years in particular has to be on asset accumulation. Your physical gold and silver are a great start, but not enough. As I preach in the Stacker's Wealth Pyramid, once you get your financial life in order, the next step is physical gold and silver ownership, and your gold and silver will keep you from going under, as your wealth will be ultimately measured in ounces and not dollars. But we have to continue progressing up that pyramid. As I've shown you in the previous video, which I will link at the end, you really don't need a very large stockpile of gold and silver. Now, there is a reality that more is always better for the most part, but you don't actually have to have huge stockpiles. You do need to stockpile assets that grow and continue to increase over time, especially right now. The reason the rich are getting richer and the middle class is shrinking is because every time there's a crisis, they just print more money, and that money flows to assets. Right now, there are incredible opportunities to pick up assets for dirt cheap. If you've been with me since 2021, we've been patiently buying gold and silver at incredibly cheap levels, and I've been pounding the table about uranium, gold, and silver stocks. There are still incredible opportunities in oil, gas, nickel, tin, copper, even though copper's had a big run. Buying more assets is how you beat inflation. Since that event in 2020, I've been able to more than double my net worth, while I've watched family members and loved ones experience the opposite. The double-edged sword of this situation is that those without assets not only miss out on the opportunity inflation presents, but even worse, they actually suffer more because the taxation of inflation is not uniform. It's like the bullwhip, hitting those furthest from assets the hardest. So keep stacking, and don't forget, we only win this game by accumulating assets. In the comments section, how has inflation impacted your stacking? A little, a lot, or not at all? What assets have you been accumulating? Or simply put an A+ in the comments so that everyone knows that you always stack smarter and never stop learning. Normally, the outro music will be playing, we'd be done with the educational content. However, in this video, I have sponsored content that is being disseminated on behalf of IBER American, US ticker IBRLF. Thank you to IBER American for sponsoring this content. In thinking about how to introduce this company to you, I kept coming back to the phrase carpe diem. As I think about inflation, and I also keep thinking about this shift from financial assets to real assets as shown in this chart, this generational shift is something I don't want to look back on with regret. The last thing I want to wrestle with are my thoughts of, I should have done more, I should have invested more, or I should have taken more shots. While I am confident about what gold and silver will do, just can't ignore some of the other critical metals that are positioned to perform long after gold and silver have their run. This is partly why I enjoy introducing you to companies and other metals like lithium, copper, and today tin. I know, you're thinking tin with a question mark. I thought the same thing 2 weeks ago until I heard my Uncle Rick Rule talk about tin being the forgotten metal. Of course, when I looked into it, he was 100% right. Tin is absolutely an essential metal, and just look how the price of tin has performed this year. Tin is up around 30%, which is a larger gain than copper, actually. The next thing I know, I get a message and I'm being presented with an opportunity to research IBER American. What really grabbed my attention is how they have seized the day. IBER American is in the final stages of acquiring Europe's largest tin mine, named the Panuta, hopefully I got that close, project in Spain. The current owner recently stopped mining this project, and let me be clear, they stopped mining while they were having historic levels of production, which was also after them spending tens of millions of dollars over the last 5 years or so to reach that level of output. At its peak, the previous company's market cap had reached roughly around 78 million. Meanwhile, IBER American stands to acquire it for 6 million Canadian, which means very quickly they could become the owner of the largest tin tantalum mine in Europe, providing all goes well. With ownership slated to be changed within a few weeks, pending a shareholder vote and financing, IBER American believes that they will be able to resume production and become profitable in a very short period of time, which they believe would make them worth at least $22 million in a heartbeat. I like their plan because it's very simple and straightforward. Campbell Betcher, the CEO, has brought in engineers already with the explicit goal of resuming production and increasing revenues by improving quality and accelerating the production. I don't have time to go through their entire leadership team, but you can see there is a collection of really successful and accomplished professionals, many of whom have been involved with leading billion-dollar companies during their careers. As I learned preparing for this video, the base case for tin is far more compelling than I even knew, with over 50% of the world's tin being used in soldering, and demand is expected to double by 2028. What's even more interesting is the fact that China is both the world's largest producer of tin and at the same time it consumes more than it produces. All of this makes IBER American a very interesting investment opportunity. I want to thank IBER American, US stock ticker IBRLF, for sponsoring this video, and I encourage you to check them out. As with any investment opportunity, folks, here, you need to do your own due diligence. You have to be the investor because you always have to own your own results.